Okay, let's dive right in. A massive change is hitting the world of Indian taxation. A brand new Income Tax Act is about to replace a law we've been using for over 60 years. But the single most important question for every single professional and business owner is this: when does this new era officially begin? Let's break it down.
Welcome. Today, we're doing a deep dive into the very foundation of the new law. In this explainer, we're laser-focused on Section 1 of the Income Tax Act 2025, because this is the section that really sets the stage for everything else to come.
So, here's our game plan. We'll kick things off by understanding this big shift. Then we'll deconstruct Section 1, I like to call it the Act's birth certificate. We'll compare it with the old law, figure out the transition rules, and then wrap it all up with the key takeaways you absolutely need to know.
You know, for decades, the Income Tax Act of 1961 has been the absolute bedrock of direct tax in India. The new act, the Income Tax Act 2025, isn't just a minor update, it's a complete overhaul. The goal here is to simplify, to consolidate, and to modernize the law for our economy today. This really does mark a major new era in our country's financial laws.
All right, now let's get to the good stuff. The Act's birth certificate. Honestly, that's the best way to think about Section 1. Why? Because just like a birth certificate, it tells us three fundamental things: the law's official name, where it applies, and its date of birth, when it actually comes into force. And here it is, the actual text right from the statute itself. It's pretty straightforward, right? Subsection 1 gives us the name, the Income Tax Act 2025. Simple enough. And subsection 3, the part we've all been waiting for, gives us that critical date, the 1st of April, 2026.
So, if we break it down, it's as easy as 1, 2, 3. First, the name, the Income Tax Act 2025. Second, its jurisdiction. It covers the whole of India. And third, the all-important start date, 1st of April 2026. Seriously, that's the date you need to circle on your calendar right now.
Now, it's really important we get what the law means by India. When the Act says it extends to the whole of India, it's not just talking about the land. If you look at Section 2, subsection 52, you'll see it's a really comprehensive definition. It includes territorial waters, the continental shelf, the exclusive economic zone, and even the airspace above it all. This is done to make sure there's absolutely no confusion about its reach.
Let's just pause on this date for a second. 1st April 2026. Every single provision of this new act will apply from the financial year that begins on this day. That means the very first assessment year under this new law will be 27-28. This is, without a doubt, the single most important and practical detail from Section 1.
So, how does this new beginning stack up against the old one? Let's do a direct, side-by-side comparison of Section 1 from the new Act and the old 1961 Act. I think this shows the legislative handover perfectly.
As you can see from the table, the basic structure is almost identical. The short title gets updated, obviously. The territorial extent? That stays the same, applying to the whole of India. But the real story is the commencement date. The 1961 Act began on April 1, 1962, and the new 2025 Act will start on April 1, 2026. That's a gap of exactly 64 years. Wow. Now, this big transition naturally raises a huge question. What happens to everything that was done under the old law? Well, the new Act has a very clear answer for this. It's called the Repeal and Savings Clause, found in Section 536, and it is absolutely essential for a smooth transition.
First things first, the repeal. Section 536, subsection 1, leaves no room for doubt. It is crystal clear. The Income Tax Act of 1961 is hereby repealed. So, as of April 1, 2026, the old law is officially off the books.
So that leads us to the most practical question on every professional's mind, right? What happens to all the ongoing stuff? The pending assessments, the appeals, the penalties, the refunds that are all related to financial years before April 1st, 2026.
This is where the brilliant savings clause comes into play. Section 536, subsection 2, is all about ensuring continuity. It saves all the past operations and ongoing cases. This means any proceedings for tax years up to March 31st, 2026, we're talking pending appeals, penalties, any rights or liabilities. All of that will continue to be governed by the old 1961 Act, almost as if it were never repealed. This is so crucial because it prevents total legal chaos and guarantees a seamless handover.
Okay, so we've gone through the core pieces of how this new act starts and how the transition works. Let's boil all of that down into a few key points that you absolutely have to remember.
So,
let's recap the must-knows. The official name is the Income Tax Act 2025. It applies to the whole of India. The crucial start date is April 1, 2026. From that day, the 1961 Act is formally repealed. And finally, remember the savings clause. All pending matters for earlier years will still be handled under the old Act.
As we close out, I want to leave you with something to think about. We are literally moving from a law that has defined our economy for over 6 decades to a brand new framework. So the real question for all of us is, how is this fundamental shift going to impact your work, your clients, and your practice in the years ahead?
Thank you so much for joining us for this explainer. If you found this helpful, please do like, subscribe, and share it so you can stay up to date on this new tax regime.
Just a quick reminder, this explainer is for educational purposes only and is not professional advice. Tax laws are always subject to change. Please be sure to consult your professional advisor before taking any action. This is an AI-generated educational explainer.